Hello friends, good week. How are you today? Vladimir here, and this is the weekly review for 17th of February 2013. Well, what did we have on the previous week? We were talking about many pairs on the previous weekly review, as the euro pairs, as the pound pair, yen pairs, of course, indices, some commodities, some stocks, and during the week, of course, I shared with you on the blog some posts. As you can see here, the bank stocks are reaching the end, preparing the ground for a down move. I was talking about that. And now I want to go over the things that happened actually. And of course, first of all, I would like to start with the G20. I don't know why, but for me it feels like everyone afraid of announcing that there is a world war currency. There was a plan to blame Japan of leading that, and it finished with nothing actually. It finished with nothing. All the G20 leaders said we should do everything just not to allow the world war currency, but it's happening. It's in front of their eyes, and then, as we know, politicians tend to wake up too late. Maybe not too late, but when it's very, very, very late already, and a very, very big damage already done. So, not taking any action against Japan most likely will allow them to continue to do whatever they want, and we will see most likely for a long run, I'm talking for months or maybe even 1 year or 2 years from now, maybe even more, to create new highs. And I will discuss about that, and of course on the charts. I was talking now back to, of course, the chart. I was talking about the New Zealandian dollar, and I said it should be very good opportunity for a sell as long as it keeps below the last high. And in this case, it failed. I don't know. I didn't find any, well, not technical, not fundamental reason actually, for sudden rise up. And maybe it's a fake rise. Maybe it's a fake rise, as I said. Anyway, the aggressive attempt to go short right from here failed, and the New Zealand created new high. And I'm still on the opinion, on a very, very big opinion, that for conservative mode, a break below this channel should take us to new lows. And I do think that for a very long run, that's exactly what's going to happen. Maybe this is a false break. Maybe that's the beginning of the next down move. Now, why I think New Zealand is going down, and maybe it's too early, but that's my opinion. Take a look on a monthly chart. Okay? Imagine it's reaching again 0.88. Imagine it's going higher to 0.90. Does it matter? No. You see what I see? Do you see that? We are in front of a monster divergence on a monthly chart. Where exactly? How exactly it's going to happen? Time will tell. This is a monthly chart. I can talk and talk and talk, and it will not change within several months. But for long run, we all see the direction. Something huge is about to happen. And I would not be surprised if it will be even stronger than it was in 2008. I would not be surprised if it will take us again to this trend line, which actually is moving on a monthly channel, as you can see, right? 1, 2, 3, 4, 5. Now we're playing. I'll not be surprised if it will go all the way down again, starting somewhere in 2013, maybe 2014, I don't know. And then bam, strong long crash. With such divergence, it is only, but only question of time until huge drop down will happen, and it will happen. This is why I think should find the opportunities to sell that aggressive, with small protection. And from my point of view, 100 points is small protection whenever the opportunity comes. 150 even small, because the opportunity of the amount of pips is huge. The potential is huge. We're talking about 2,000 points or so, 1,500 or 2,000 points. The potential is huge. That's why I think whenever the opportunity comes, you should jump in and attack. That's my opinion about the New Zealandian dollar. And of course, it affects all the New Zealandian pairs. I was talking about the New Zealandian, pound New Zealandian, sorry, and I explained the situation here. It was a false break here with a kicker and an engulfing. Well, it did not turn to work yet. And as I explained on my 2013 prediction, we might go for new lows. We might go for 180. We might go for 175, even 170, and even 175, 165. Very, 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 very reasonable. But why I think this is the end? Exactly as I was looking on a New Zealandian dollar, the same I'm looking on the pound New Zealandian monthly chart. Watch that. You see this divergence developing here? That's, my friend, is only question of time until you get up 2,000, 5,000, and even 10,000 pips move up. This is going to be monster. The last time it happened was here on 2005, 2006, as you can see. It was a developing here of this divergence, right? As you can see. Then we got a move of 6,000 pips more within several months only. That's exactly what will happen here. Yes, of course, it could keep pushing and pushing and pushing. 175, 170, very, very reasonable. But I do think that we are going back all the way to 240 when it's ready to go up again. Pound New Zealandian will go all the way up again. And the day it will be 240 again, maybe even 270 is not so far. From my point of view, the opportunity is huge. And that's why I think it's time to be on a buy direction. Of course, because I just said that it could drop so far, it means the only way to hold such trade is to use negative leverage. Never use leverage on such situation. Never use stop loss, because you buy something that should rise within the next years, right? And that's why this is like an investing on something, and that's exactly what it is. That's investor style. We invest on this pair. Of course, the next attacks should be only based on weekly chart with the next lows, if and when will be created, and the next candle patterns. It reminds me the dollar franc. Do you remember these, friends? Right? I was talking about this pair so long. I was showing it so many times. All these drop down with all the continuing divergence forming. And I was saying, when we were actually here, I said we are going all the way back to around parity level, right? Around the parity level. And the drop down just allowed us to increase our exposure, to invest more with such a divergence. And a monthly, you remember monthly, right? Monthly divergence formed here on the MACD histogram. And RSI on monthly was reaching the bottom. And whenever it happened, and it happened all the way back to around the parity. That's why, again, with long-term charts, we just cannot argue. That's why I think pound New Zealandian is very long for long run. Another New Zealandian pair which I find opportunity to be in is Australian New Zealandian. Based on a weekly chart, we have supports already. Yes, this pair could drop to 120. Yes, this pair could drop to 118. Yes, this pair could drop even to 116. But we are reaching a bottom. And it's pretty clear. The Bollinger Band is going for a duplication, maybe one, maybe two. Daily chart is forming a continuing divergence already, so we might see some retrace already. then another push down, most likely, but again we're creating a bottom right here, and a very big retrace will come right after that. The first and the very conservative target which I see will be the trend line, of course. I do think that this pair is moving inside the channel, and that's why exactly that's the reason why I think we are reaching a bottom here. Okay, maybe we're already in the bottom, and retrace should start itself. Maybe down, maybe small up, then down again, then up all the way again. I do see several hundred points up opportunity within several weeks period happening. And Oz Kiwi, from my point of view, based on investing style again, is a good pair. If for pound New Zealand and you pay the swap, for Oz Kiwi you gain the swap, and that could be good double holding position. From one you pay, from other you gain, and you in total you will be around break even. Of course, depends on your broker and the swap they take. You'll be around the break even, holding two amazing pairs, amazing opportunities for the long run. From my point of view, this is it. It's time to be there. Just one thing, based on monthly chart of Aussie Kiwi, if you pay attention, right from this low or previous low, we have a bullish hidden divergence forming, and that's another reason why I think during the next weeks or months it's going to create a bottom somewhere here during this period and take all the way up again whenever it is ready. Holding with a positive swap provide us an amazing opportunity, and that's exactly why I like it. Aussie Kiwi should be very good opportunity. The MACD behavior right now reminds something like it happened during 2001, actually 2002, playing around, then drop down, and right after that creates the bottom and a huge up move. Maybe we are going in front of that right now, as you can see. Maybe it's going to here, to bounce from here several hundred points, then push another push down, and then all the way up again. As we can see on the monthly chart, it has pretty clear range, and it's moving inside. Well, as you can see here, right after pay attention. This was a drop down. This was a drop down, right? After this up move, as you can see, we got a retrace down. First attack down, another attack up, down, and here. That's what I'm talking about. So that's exactly what I expect to happen right now. A stop around this level, a push up, at least several hundred points, then maybe another low, back to the previous low, and all the way up again. And for the first attack here, that's exactly why I think we should be there already. 120, 118, 116, very likely, before retracing for several hundred points, then maybe down again, and well, we will see. But holding that and enjoying the cycle, enjoying the swap, should be very wonderful opportunity. Of course, pound New Zealand look much better, but Aussie Kiwi is a good hedge for the swap, position against the pound Kiwi, with the pound Kiwi. Now that's about the New Zealandian pairs from my point of view. Yen pairs. Well, I said based on the G20, they said nothing to Japan, and for long run, Aussie dollar. Sorry, I'm still on the Aussie Kiwi. Dollar yen and the other yen pairs could go and reach new highs. We should pay here for one thing. On a monthly chart, there is a bearish hidden divergence forming, which means right from here or maybe a bit higher, a cycle will come. We should take the pair a bit lower again based on weekly chart. That's extreme divergence. Based on extreme divergence, it could drop all the way down to the area where it all started, which means 85, 86. Time will tell. I think a bearish cycle is in front of us during February or during March. I think it's about to begin. Maybe it will last to April, and until the summer I think this bearish cycle will happen. Something like it's going to play, maybe a bit higher, maybe a bit lower, and up until summer. And right then we will most likely get somewhere here next buy opportunity for next highs. And that's the same as everywhere for all the yen pairs. I think it could create new high, maybe yes, maybe no. Play during February, March, April. It should start going down, and then during the summer buying it again. This is my opinion for the yen pairs. Until then, look for sell opportunities. Let's take a look on the dollar yen. Dollar yen created a false break here. I was talking about that on the blog. As you can see, that's it for the dollar yen. I explained exactly why and how it should be sold. So if your daily chart closes below 94, that's a bearish sign. Then 2 days after that, on the market update, I asked you, if you pay attention here, dollar yen, right? I think we should take 80% profit around 92.70 and set stop loss to break even. Now pay attention what happened on a daily chart. We were here, right, around 92.70 when I said we should protect it, take profits at least somewhere, and move to break even. During Friday, you see the retrace happen. That's exactly what I was afraid of, and that's exactly what happened. What's about to happen now? From my point of view, it's very tricky now. Pay attention to the MACD. First of all, we got a very bullish candle on Friday. Pay attention to the MACD, still dropping down. That's a very, very tricky sign. Many times it's very bearish sign. So I would not be surprised if right from here at the beginning of the week, dollar yen will continue lower to 91.40, breaking below that maybe back to 90, and of course there is 86.80 level which still should be reached based on the gaps. This is from my point of view a pair which we should look for sell opportunity. Okay, that's about this. Now what's going on with the majors? Well, about the euro dollar, I prefer right now to stay out. I think as long as 132.80, 132.40 holds, euro dollar is still very, very potential for a buy. Once it will be broken, including the trend line, of course, including the channel and everything, the euro dollar might open the doors for the down move. I'm very, very on neutral zone right now. I prefer to leave it alone. But the pound dollar seems very, very, very interesting. Let's analyze the pound dollar. There is a monthly triangle right here, right? At the end of this month we might get a very, very, very strong breakdown. This could be very bearish sign for the pound dollar to come, right? But well, first of all, no one knows how the month is going to end. But let's go lower time frame. On weekly, Bollinger Bands breaking down, which means we can go for duplication. Duplication take us to 153. Double duplication take us to around 147. Let's go for daily chart. On daily chart there is some divergence developing. Is this the end? Not sure. Not sure at all. And that's why I do think pound dollar is reaching a bottom before a retrace up for several hundred points. But I'm not sure this is the bottom. What do I prefer to see? A clear stop of the MACD. I want to see the MACD creating and ticking up. Turn that up. As long as it does not do it, this is not a clear situation. This is not a clear divergence yet. I do see more down move for the pound. And that's exactly why I don't think it's time to be there. I think it's very likely to reach 153, maybe even lower. In case I'm wrong and it creates the MACD, it makes the MACD turn up, as I just explained, then on lower time frames I'll be looking for buy opportunities, of course. Anyways, for now I do not see the pound dollar reaching anything higher than 158, 158.50 maybe. I think this is the maximum, and I will planning to buy in case it drops. It keeps dropping back to 153, maybe even lower, based on the weekly and monthly charts, of course. This is my opinion, bearish opinion, unless a divergence takes place here. What does it mean about the euro pound? Well, there is something we have to remember. The news coming from both countries, euro is not a country actually, it's a zone, are very, very, very bad. And the main thing, of course, is the GDP of Germany, France, Italy, and actually all the eurozone. The economy is going down, is slowing. That's what the data shows. Still, I think that the euro pound is very tricky here. It seems like it's going to break, did not yet. I would not be surprised at all if it turns around, push it again for a double top or even bit higher. Based on the weekly chart, there is a gap to close around 087.70, 087.80. I would not be surprised if it push here, maybe even bit higher, before making a huge drop down. And this is exactly what I plan to follow. As long as it does not break clear, this was and still a very, very strong support. You see it up and down, holding there several times, now holding again. It's around 085.60, 085.50. Breaking below that, and RSI breaking below 50 with the trend line it has here will change my mind most likely. As long as it does not happen yet, I still think it's able to push up before crashing all the way down. And as I said, I do see the euro pound reaching this trend line again, definitely. So I will follow that from around 087.70, 087.80. It's very potential level to start the sell, and that's what I plan to do. Euro Aussie, very tricky, and let me explain why. You see this bullish candle on Friday, very, very, very bullish sign. You see the MACD going down. That's exactly why it's very, 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 very tricky. I don't have an opinion right now. I do plan to see the opening of the week. I would not be surprised if right from here we keeps dropping down. Maybe after one day, maybe after 2 days, if it makes some stop and then keeps going down. As I said, I would not be surprised if the Euro Aussie will go all the way down to this trend line and then break it and take us all the way back to 121, 120. Time will tell, of course. All depends on the euro. In this case, I don't even think it depends on the Aussie. I think it depends on the euros. Gold and silver. Well, read my lips, friends. Gold and silver both are going down, but they both are creating bottoms. This is a weekly chart for the gold. There is a monster support here, and there is a level that I still think it's very reachable, and that's 1434. I think this level can be reached, of course, but I do think gold and silver creating a bottom. Where exactly? No idea. But I do want to follow the RSI, and I do want to follow the MACD. I think we might go for an extreme divergence. It could be on the previous bottom, it could be lower, of course, but prepare a potential buy. Prepare a potential buy. This is a gold, this is a silver. On silver is pretty clear, we can go for duplication of the Bollinger Band, but again pay attention for the MACD and RSI. RSI below 20 could lead for a bomb up, and I do see the silver moving on something like that, reaching around 28, 29, maybe below 28. It's pretty much the same, making a stop and all the way up again for hundreds points, of course. Last time RSI was on 20 on the silver was here. That was during 2012, as you remember, and played, creating another top, and then from 26 all the way up to 35. Will history repeat itself? Most likely yes. Few words about the indices. Well, you know my opinion, nothing actually changed since the last time. Only one thing is annoying, and that's the way it's moving. I do think, as I said, every new high will be fake and just a stronger sell opportunity right from here for the Dow, S&P and Nasdaq, or we are pushing for another wave up, the last wave up, something like that, 1, 2, 3, 4 flat and 5, and then huge drop for very long run, or we are coming all the way down from here, and not for that long down move, and for a strong correction, I would say, and then up again. For the Nasdaq, there is one thing to pay attention to. It might be a head and shoulders. I'm not convinced about that yet. It might be a head and shoulder. It's pretty obvious right now. That's why I'm a bit afraid of that, and I think it's very tricky here. I would not be surprised if it pushed up again, but as I said, every new high, every up move, from my point of view, is there's no reason for that. I don't know why. I really don't know why. I read a lot of reports, I read a lot of things, but too many options for something to happen. Something bad is in front of us. I don't know why. I don't want to sound pessimistic. I'm just watching the chart, and that's what I see. I do not believe the price action as it is. From my point of view, it is fake. That's my opinion. Maybe I'm wrong. That's my opinion. And of course, this is relevant for all indices. Swiss index, which also creating something very fakeable here. Only question of time, from my point of view, before we get some serious drop. And I do suggest you read my last post on the blog about the stocks, right? I explain here why JP Morgan, HSBC, Morgan Stanley and Goldman Sachs all should create a high soon and begin to drop down. That's my opinion. This is all for this week, friends. I wish you wonderful trading. Thank you very much for your time watching this video. I'm Vladimir Ribakov, and this is the weekly review for 17th of February 2013. Have a wonderful week, good trading, and thanks for your time. Vladimir.